can be heard. Hello, everyone, and welcome back to the Quickbooks online WebEx session. If anyone can hear me, please reply by chat. Thank you very much. There was a problem with the recording the last two times. Unfortunately, it did not record, and therefore, for your job board was not able to send out the recording. We're working to fix the problem, and hopefully today it will be recorded, and we'll send it out as soon as possible. Today we will continue and basically go through some other steps, how to customize and make QuickBooks work better. I got some requests to cover the new feature what QuickBooks Enterprise 2011 offers in terms of advanced location for inventory. Basically, this is a feature that has to be set up and it's only available on the new version, the latest version of Enterprise 11.0. In order to take advantage of this feature, we have to make sure this feature is activated by going to the Edit menu, click on Preference, click on the left side, Items and Inventory, Company Preference, and make sure Advanced Inventory is enabled. Once this is enabled, now you're able to see multiple locations, but keep in mind, now you will have to assign locations. You will have to assign locations. To every bill when you receive the merchandise and every invoice when the merchandise is being shipped. And the same applies to every credit, meaning vendor credit, when you send out merchandise, send it back to the vendor, and every customer credit when you receive back from your customer. In other words, and the same thing applies if you want to move from location to location, then you will have to assign site, which is locations. Let's see first how we see the inventory site list. On the home page, more towards the right side on the top, you will see what's called inventory activities. Click on the arrow and you have 4 options. Option number 1 is to build assemblies. Very few companies use that, so we'll skip it for now. Option number 2 is adjust quantity / value on hand. This is if you need, for whatever reason, you need to do an inventory adjustment. First, before you start doing adjustments in inventory, you want to see a report, what the status is of the inventory. Go to the Reports menu, scroll down to Inventory, and here you have a whole list of inventory reports. First you have a list, a report, quantity on hand by site. This is a brand new report not available in the previous versions, simply because now you have multiple sites, multiple locations. You have an inventory evaluation summary. Here you will see a list of all, as of today, this is a sample company, a list of your items, and it will only show you what's on hand. Only show you what the item that is set up as inventory parts. The quantity, first it starts on the left side, starts with the item name, the item description if it has, the quantity on hand, the average cost. That's the way QuickBooks calculates the value of the inventory based on the average cost, not on the actual cost. It doesn't mean that there is no cost per site. That means it's going to be, it will tell you the inventory value on the other reports. It will tell you per site. Here is just the total. It doesn't tell you exactly where this merchandise is actually sitting. First we want to see what your actual inventory valuation is. And then the quantity on hand times the average cost equals the asset value. And then you have the percentage of the total assets. Because the total assets here on the bottom is your grand total of what your inventory is worth. How do I get to this report? I click on the reports, inventory, and this is the second report, inventory valuation summary. This is where we're up to right now. Then you have the percentage. If on the item list you enter a sales price, then show here, and this is your only, of course, the suggested retail price, and then multiplied by the quantity on hand, it will show you what the retail value is, and then the percentage of the retail value. This is to determine and to see exactly what your inventory is worth. If you see any negative on the quantity on hand, you know for sure that you sold more than you had. Quickbooks will alert you, it will warn you if you're selling merchandise that you don't have on hand, but you can bypass it. So sometimes you could see, if you're not careful, on quantity on hand, you could see negatives. Especially if you create an invoice, but didn't enter a bill or an item received for the items. Let's close out this report and go into the next report. This is an inventory evaluation summary by site. Reports, inventory, the third report. And this is by site. On the top, you can say which site do you want to see. You want to see all inventory. You want to see only site number 1, which is here called warehouse number 1, or warehouse number 2. Let's see how warehouse number 1 looks like. And this is basically everything that it's in warehouse number 1. And then you can switch around to warehouse number 2, obviously nothing. And you see dropship, which is supposed to be dropship by customer. This is basically the two types of reports. You have inventory. Dropship is you have inventory supposed to send it. You can call your sites whichever you want. One of them is a location. They call it dropship. And then this is something like you have inventory, but it's assigned to go to customer. Asset value sometimes could be greater than the retail value, and this is because you have an average cost of $100 for this last item. You have 20 pieces. So your asset value, your cost is $2,000. On the item card, on the item list, if you bring up this item, it does not have a selling price. That's why the system doesn't know what your sales price is and, of course, what your retail value. And that's why sometimes you can see the retail value is less than the cost, which is the asset value. Question: if I receive inventory to one site at $10, to another site at $5, what cost contained per site an average? It's going to be both sites. It's going to show $7.50 per piece as average cost. As I mentioned before, Quickbooks does not have the ability to keep track, neither FIFO nor LIFO, not first in, first out, and not last in, first out. So that's why you don't have the actual cost, you only have the average cost. Any other questions? This is a report that can be very helpful. You only want to see the quantity on hand without the dollar amount. You click on quantity on hand. Reports, inventory. The first report is quantity on hand by site. Here's telling you by site, the total of the two sites, what you have, and then the total per item. This report does not give you the grand total by warehouse and total. Question, is this only in 2011? The answer is yes, and not only in 2011, but only in Enterprise, the hardest version. So it's Enterprise 11.0. Now, how do you create sites? Inventory site list. On the home page, inventory activity, on the top right side, inventory site list. Dropship, as they say here, is shipped directly from vendor. You own this merchandise until it's being invoiced. Some companies will have consignment. Let's not get into details of consignment. You send merchandise directly from your vendor to your customer, but it's still on consignment. It's not a sale. You still own the merchandise. Where is it? It's your inventory. It's your cost. Where is the actual inventory? Well, it's by customer. And one of the options is it's because it's dropship. That's number one. But most of the time you will use dropship when your vendor confirms that they send the merchandise, they will obviously send the bill. You will enter the bill in the system. Now, on the bill, you will have to specify the location. Well, if you never got the merchandise in your warehouse, you can't say warehouse number 1 or warehouse number 2. Well, it went straight to the customer. And you are required, if you want to use the advanced location, then you are required to give it the location. Quickbooks calls it the site. Let's see how a bill looks like. When you go into items, anytime you select an inventory item, you will have to enter the location, also known as a site. So if this was dropshipped directly to the vendor, to the customer, from the vendor to the customer, you will select dropship. So it's in your warehouse, it's in your inventory until you create an invoice. For the location is dropship. You can add, let's go back to this report, to this list. You can add new sites. You can edit if you want to rename it, and you can delete it. And of course, only if it's not used. You can also edit this site by double-clicking on it, and you enter the locations and everything else. Basically, name it the way you want it. Then you have the option to transfer between sites. Let's say, for example, you have a receiving point. All your merchandise arrives in one location, in a bin. And then you decide you want to pack it wherever site you want it. Now, on the bill, the site address is the physical location. Let's say you use a public storage, and you have 2 public storage. one in New York and one in New Jersey. One site's going to call, let's say, the public storage of New York with the address. And another site's going to be called the public storage of New Jersey or New York and with the address. When you enter a bill, you will have to select a site. Anytime you're saying that I bought an item, an inventory item, the system will not let you bypass if you didn't select the site. If you try to save it, this is the message you will get. You must assign a site to every line item with an inventory or assembly item. It needs to know, basically, where is this merchandise going. Basically, the address details that you just enter, like any other context. You put in the address here, the city, state, and zip, and then the country. That's it. You click OK, now it's going to show up on here. So, for example, if you want to enter, this is your site. Now it's going to show up like this. Okay, this is basically where your site is. Let's go back to bills. So now you might have, in your location, you might have a receiving area. So whoever puts it in the system as receiving, don't know exactly what location it's going to be. So you might set up something called receiving. And the person in charge of entering the inventory, the item receipt, will always use the site called receiving. Then, whoever is in charge, so let's say I'm buying this item, 5 pieces, and I'm going to add now it's in receiving. Save and close, and that's basically. Now I go into my reports, inventory, quantity on hand by site, and I see 5 pieces of this item is under receiving. Now the person in charge of putting away the merchandise wants to transfer it from receiving into warehouse number 2. They click on inventory activities, transfer inventory. Today's date, you want to give it a reference number? From which warehouse, which site, receiving, to, let's say, warehouse number 2. What items? Select an item or select multiple items. Then you can decide, I want to transfer this, I want to transfer this. But of course, since we select that I'm about to transfer anything from receiving, it will only look what's available in receiving. And of course, you will only see only the first item is available. Anything else is 0. You can't transfer something that's not available. So you click on the selected item. And now, how many pieces do you want to transfer out? Do you want to transfer everything or just partial? And that's your decision. So let's say I want to transfer out everything, 5 pieces. Basically done, saving close. Now you go back to the same report, quantity, inventory, quantity on hand, by site, and you see nothing you're receiving, 2 pieces, which is old receivings in warehouse number 1, and the new 5 pieces in warehouse number 2. You can double click on it, and you will see the inventory transfer. Double click on the 2 here, and you will see those 2 came originally straight to this location. Any questions so far? Let's say time goes by and we need to do a physical inventory. You will click on Reports, Inventory, Physical Inventory Worksheet. A list of all your items, inventory items, and you basically print this out. And this will tell you how many pieces you're supposed to have. Now, you could filter this out by location. That was the initial question. It looks like this report, you're not able. Let's see if you can at least bring this up. Because this one, it totals. Just total. So it's all by one location. So this might not be very helpful to do physical inventory. They don't have any option to filter out by site. This is basically the report that you would use in the previous version. We'll have the items, preferred vendor, if that matters, the total quantity what the system has, and then you write in the physical count. Let's try it. Location is just, I don't think that's the, nothing is receiving. Nothing. So you know the answer. Anyhow, this is basically like a list, but if you're using sites and you want to do physical count per site, then you're not going to use this. Then whatever is supposed to question, if you need to change the amount, the physical count doesn't match. How do you adjust it? This is the next step. So you come back to QuickBooks and say, okay, inventory doesn't match. We need to adjust. Some increase, some decrease. Adjust quantity on hand. On the home page, same area. You click on inventory activities, second option, adjust quantity on hand. Now, what do you want to adjust? You want to adjust just the quantity, also just the value, or the quantity and value, and total value? What date? And then you have to give it an adjustment account. This should be discussed with the accountant, what account to use. Some accountants will say, use the cost of goods sold, call it inventory adjustment. Some accountants will say use an expense account, call inventory adjustments. Then, what you have to do each inventory site separate. If it's specifically for a customer, you know you lost it during shipping to a customer. In other words, the expense should be designated for a customer. Then you enter it here, You want to give it a reference number. And then, if you want, you can use class. Now you can select your items based on your printout. Or you can add. I want to adjust this, this, this. But of course, you will have to say the location. Right now, it doesn't show you anything because nothing is selected. As soon as I select the location, it will tell you what the system has in this location. Now you will say you have two options. Either tell the system how much you have, or adjust it by quantity difference. If you enter a 1, the system will know that you have, right now, 3 pieces. Or, let's say here, you have 1, you enter 1, automatically it will enter 1 in the quantity difference. It works either way. Let's say on this line here, you only have 5. If you enter 5, it will subtract 2 as a negative, or you put in -2, automatically knows that you have 5. And this is if you want to do just a quantity. If you want also to adjust the totals, then here you have the option, what is the new total? And this is basically if the value goes up and down. Then you can adjust either only the quantity, only the value, or both. Once you're done, you click Save and Close. This is how to adjust your inventory. Any questions so far? You want to save it? Probably not. So now we know how to adjust, how to transfer, and how to set up and maintain inventory types, which is also known as location. Build assembly, just to run through it. Assembly item. You have to set up your item first on the item list in order to be able to use it in assembly. You can also add it right here when you click on Add New. Select an item assembly, give it a name, what is the cost, what account is it going into, usually a cost of goods sold, what is the selling price, and of course what's the description, what is the selling price, the tax code, if it is, if it's taxable or not, and then what is the income account. And then this item, let's say it's a door kit, what components does it have? It can only be physical products. Well, obviously not. It can be physical products or services. It's very similar to a group. This is just designed to use it as assembly. So you select a piece from this, a piece from there, and so on, and then you decide how many quantity and unit of measure of each. Once you're done, you save it by clicking OK. Then it will show up on this list, and you can use exactly what you want to assemble. You have to tell the system, first of all, you're selling it, but you're also putting it together. So now, it will no longer be available. All these items will no longer be available to sell it because now it's grouped as an assembly. It's still in your inventory. And it's still going to be quantity on hand, but not available. If you're running low on inventory, it will tell you if you need more quantity in order to build this item. This is basically how you build assembly. Now, the system on the bottom here is telling you that according to the components, the maximum you can build is 21. Why? Because you need one of each. And you only have, for this line, you only have 21. If you're going to say here, I want to build 23, here you can see how much basically you're going to have. Now it's telling you you're running low. This is basically how a build assembly works. Sales tax. Assuming all your items is taxable items, first of all you have to make sure that you enable sales tax on your preference in Quickbooks. Edit, preference, sales tax, company preference. Do you charge sales tax? Yes. And of course, during the setup, you will make sure you have your sales tax items. You have your customer set as whoever is the taxable customer, and you have your items, whichever items is taxable item. Then the system will have a liability account called, on the chart of accounts called sales tax payable. Right now it's showing that the company only has a liability of $25,86.90. Not everything is supposed to be paid right away. During the setup, and of course you would want to double check with the accountant of the company what's the due date, when is your taxes supposed to be paid. Is it monthly, quarterly, or yearly? And this is also part of the tax. When do you pay your sales tax? Monthly, quarterly, or annually? When do you owe sales tax? And this is also a question for the accountants. Because some industries are different. As of invoice date, in other words, accrual basis, or upon receipt of payment. Some industries, if the customer didn't pay you the invoice, then it's not due to pay. Some industries, it doesn't matter. It's due either way. Then you go into Manage Sales Tax on the home page. On the top right side. First of all, this is another shortcut to go back to the same window that we were before. Come back to this setup window. Then you want to run your sales tax liability. I know today's time, most states, and I think it's all of them, they're required to file sales tax electronically, online. You need to know your total sales, taxable sales, and non-taxable sales. Then you could see tax collected based on taxable sales and based on the tax rate. And this is the liability as of last month, which is November 2015. Then you click on Pay Sales Tax. Now, in the previous window, it showed you two separate line items. You had a line item for this state and a line item for this state. Now you want to pay both on one check or a separate check. If you want them both on one check, pay all sales tax. Now it's going to issue a check for the amount it's due for sales tax. Sometimes you have to adjust your sales tax, either up or down, increase sales tax by amount, certain amount, or reduce sales tax. I know some states offer a incentive for about 5% if you pay on time. Otherwise, there is a penalty if it's not filed on time. So it's either increased with the adjustment account, let's say it's a penalty, then you will have an account called late fee or something, let's say $50, or reduce sales tax by, and it's going to be an amount, it's about 5%, and it's going to be a sales tax adjustment. You click OK, and it will affect your sales tax check. Once you're done, you click OK. Now a check is being created. You close this. You go back to the chart of accounts. Notice the sales tax payable. You can double click on it, and you will see the two. It's actually on one check, but it's two separate lines because it's paying off two separate liabilities. You can double click on it. Right now it's set to print. You can print it. What's your next check number? Let's say it's okay. In order to print, there are three types of checks. One is called voucher, which is the left side. One is called standard. The voucher is the check on top, two stubs. Standard, three checks. If you choose standard, you print more than one check, you will have to say how many checks you have on the first page. Or wallet checks. And this is a check and a stub right next to it. And then you click print. Once you print it, it will ask you did it print correctly, and it will give, system will give a check number. You can also print checks, of course, when you click on the home page, print checks, and this is a list of all your checks marked to be printed. This is very simple how to manage sales tax in Quickbooks. Now, some bookkeepers will try to do it the easy way. They go to write check, pay to the order of the agency, the sales tax agency. The amount is due based on that liability report. Account, sales tax payable. It's correct. It will create a problem in Quickbooks. The liability will never update. So that's the correct way to always make sure manage sales tax and pay sales tax. Now when you go back to pay sales tax, nothing in here because it's already paid. If you change the date to the end of next month, now it will update accordingly based on the new invoices charged. Any questions so far? $10.99. In order to issue a 1099, you click on Vendors, Print/eFile 1099. You have basically four options. First of all, you run your report, which is a report for all vendors to make sure they're all flagged correctly. You see some vendors, the majority don't have a yes for eligible for 1099. Go through your list carefully and make sure they're all flagged correctly. If one of them is supposed to be 1099 vendor, double click on it, click on the additional info, check mark vendor eligible for 1099, enter the tax ID number and the Social Security number, or the Social Security number. Once you're done, click OK. That's first line. Then you will need to set up the account mapping. And this is the same way you're going to edit preference, tax, 1099. You want to make sure with the accountant what's involved based on the industry. On a company, what's involved, who is supposed to issue a 1099, and under which box on the 1099 form does it belong to. Most of the time, which the 1099 is miscellaneous, that's box number 7, and this is for non-employee compensation. Here you will have all your subcontractors. If you have outside sales rep, you pay commission. You will have one of your expenses. Will be sales commission or commission. That if only one account is due for a 1099, then you can simply select it. If you have more than one account, scroll up all the way up and select multiple accounts. And here you will select which account it's supposed to be. And it's basically anytime you issue a check for a private person or for a company, not a corporation, then you're required to issue a 1099. Any accountants here? Correct me if I'm wrong. Then you will have to decide. It's not always the case when you write out a check for that person. Because sometimes you're writing out a check. Commissions, consultants need 1099. Well, if it's for compensation, payable to a private person, then the answer is yes. Of course, it's not for every penny. It's only for above $600 total per year. If you're writing out a check for one of your employees or for an outside person, and the reason is not because of compensation, it's because of reimbursement, expenses that this person laid out, then you want to make sure you categorize them correctly. Otherwise, they will be included on the 1099. So you basically select all your accounts that your accountant tells you this is supposed to be included on the 1099. You click OK, and now it will be included on here. When you're done, you click OK. This is how to do map accounts. You have to be very careful when you do map accounts not to include or exclude anything that doesn't belong in there. Then you want to run the report, which will tell you exactly what's on box number 7 and what's uncategorized. Uncategorized means this vendor is eligible for 1099 based on the vendor setup, but the compensation, the bill or the check, is not categorized under this mapping on the account that you mapped before. So you can double click on it and you will see here you had a bill for this amount, and it's under gas and electric. So this vendor is eligible for 1099, but this account is not included. So you know the answer. The same thing is with the next one. You see that this vendor is eligible for 1099, but not this category. Then you can see the account here. It's job materials. We only selected this type called subcontractors. So you know exactly, if you see something like this, you want to make sure that this is correct. And of course, this is also correct if it's supposed to be 1099. Once everything is checked, then you would either e-file, and you're using Intuit 1099, but of course you need a subscription. Or you can print it. You click on print 1099, which year do you want? Most of the time it's last calendar year. You click OK. Now it tells you based on the report, you have a valid ID, which is a social security number or a tax ID number, which is okay, yes. But you're missing the addresses for these two. So you want to make sure you go back and correct it. You can preview it, you can print the 1099, and then you can print the 1096 when you have to send it into the IRS. Here you can decide you only want to print one in case you have to reprint. And once you're done, you can print the 1099, how many copies you need, and you're basically done doing 1099. Any questions so far? Payroll. First of all, you want to make sure we have the setup correctly. Question, is it the company's responsibility to report 1099? As far as I know, yes. The recipient is supposed to get a copy, basically 3 copies that you're printing. Copy A goes to the IRS, copy B goes to the recipient, copy C stays for your files, for your records. Copy B is supposed to be sent out to the recipient by the last day of January of the following year. So for the year of 2011, the recipient is supposed to, the company is supposed to send it out by January 31 of 2012. The IRS needs to get it. The IRS needs to receive 1099 copy A along with 1096 at the end of February. David's saying 1099 is by the end of February. As far as I know, this is only for the IRS. The 1099 for the recipient, my accountant advised me it's supposed to be the end of January. I guess he wanted me to hurry up. Anyhow, coming back to payroll. Jen is saying the employee is supposed to get at the end of January. Is this for 1099s as well, or only for W-2s? Thanks, Jen. Payroll and employees. Under Edit Preference, Payroll and Employees Company Preference. Now, there's 3 options how to use payroll in Quickbooks. Full payroll, no payroll, or complete payroll. Full payroll, you want to be able to use payroll, but you don't need their service. No payroll, you won't even have the option. complete payroll customer. Then you would have a subscription. And then there is different types of services in order to use QuickBooks for that. You want only the calculations, in other words, the tax table. You want the liabilities, or you want full. Meaning QuickBooks take everything and take care of it. They should file it, they deduct your account based on the liabilities, and they take care, very similar to an outsourced payroll company. Here, this is only a sample, so we will select full payroll. And you make sure all your settings is correct accordingly. Now, the first time you do it, I would advise you to make sure you have either an accountant or a pro advisor to go through and make sure the settings is all set up correctly. He will only show you how to do payroll and not go through the procedure of the settings. Assuming everything is correctly set up, you click OK. Now, on the home page, on the bottom, you will have all your options. You want to start with tracking time. This is if you want QuickBooks to be able to transfer the time of your employee to the payroll records. You want to make sure the settings is set up correctly. You track time? Yes. Otherwise, you won't have this option, enter time. Okay, what's the first day of the week? Monday, you want to do it Sunday, you can change it. You click OK. Now you start with entering time. Now let your employees enter time. This is a subscription, a service, and you need internet. Use weekly timesheet or enter single timesheet. Enter single timesheet, looks like this. Today's date, the name of the employee, let's say it's this name, the job, what they work for, which customer, if it's specifically for a customer, and then, well, obviously you need to select a customer, and then what's the service item, what they do. And this is specifically only done to keep track of an employee's work, specifically done for the customer. What did they do? Let's say installation. If you use class, you can have notes, and this, you can have time clock. You can start this and start counting the hours. And any person Jen, are you talking about the time clock? This is in every version. And then once you're done, you can pause it, you can stop it, and you have the option to save it, of course, when there is minutes. Or you can simply enter the time. Now, is it billable? Do you want to bill the customer based on the work or not? If you don't want to bill the customer, remove the billable check mark. Next step is going to be you're going to pay your employees. First, you have to, of course, you have to make sure that the setup is done correctly. You will have, but before we start paying the employees, we will set up our employees. Either from the home page, a vertical button all the way on the left side, Employee Center on the top on the icons, or Employee menu Employee Center. Here's a list of your employees. You want to add a new employee. You like assistance? Not now. Okay, basically, fill this out. All these on the right side is newly added. Disability, I-9 on file. The previous version doesn't have it. Military, status. Start with the first and last name. Assuming it doesn't have a middle initial. Now it's going to show Joe Smith. If you want, sometimes you want the last name first, then the first name. Go into Edit Preference, Employee, Payroll and Employees, and say you want to display employees list by last name, not by first name. And now it's asking you to close all the windows. We'll start again. Now you see all your employees sorted by last name. New employee. You don't want this window to show up again. You can say do not display. It will print first name and last name. On the screen it will show last name and then first name. Social Security, gender, date of birth, marital status, U.S. citizen, yes or no, and then this is all optional. Address, this is just for record keeping. Emergency contact, anything else. Additional info, does it have an employee ID? Usually you would enter here the card number. Billing rate level, if this is performing work outside. Once these three tabs is done, you click on personal info. Now you're going to enter the payroll and compensation info. What's the rate for this employee? Regular pay, salary, and everything else. If it's salary, enter the annual rate in total. The system will calculate, based on the payroll schedule, whatever it's supposed to be paid, either weekly, bi-weekly, monthly, however you pay. So let's say this person earns $500 gross per week. So you will do 500 times, which is star on a keyboard. On a laptop it's Shift 8. 52, enter. This is the annual rate. How often do you pay your employees? Now you need to have a schedule, and this is part of the setup. Let's say you already set up a schedule. So this employee gets paid bi-weekly, every second week. Class, we're not using that. Use time data to create paychecks. If you want to keep track of this employee by using the timesheet, you will have to select it here. But obviously, an employee that earns an annual salary, you will not keep track from timesheets. Only an hourly, regular pay. If there's any additions, deductions, you can enter it on here. If this is in Quickbooks Pro, the answer is yes. Of course, they designed new features in the later versions, later years, but they were all in Quickbooks Pro. You have to make sure you click on the employees. First of all, you have to activate payroll, say full payroll under Edit, Preference, Payroll and Employees, and say full payroll. Once you create a new employee, first of all, you're going to fill out personal info, and then you're going to do payroll and compensation info. The screen should look fairly the same. Let's say you want the employees to contribute to health insurance. How much per payroll run? The limit should be, let's say, you only want a maximum of $1,200, but each time it should be, let's say, $50. Or basically, if you're doing bi-weekly, you will take 1,200 divided by 26. This is how much you're supposed to pay each payroll run. And automatically mixes the minus. Or if you want, you can round it to $50. That's done. You click on taxes. What's the status? Single, married, head of household, allowance. And this is basically everything, all the information are coming from the W-4 form that the employee fills out once it's hired. Extra withholding is they state on the W-4. Medicare, Social Security, advanced earned income credit if the employee is eligible, and then federal unemployment tax paid by company. Everything is done here. This is federal. Then you click on State tab. You select the working state and where they're subject to withhold. Sometimes in certain states, they work in one state, they live in another state. They're subject to withhold in different states. State unemployment insurance and state disability. If they're eligible, if not, you uncheck it. Filing status per state. Sometimes it could be different. Allowance. In most cases, the federal and the state is the same. Extra withholding for state. And it's just miscellaneous. And then in New York, once you select the state as New York, it will add the New York City state, the mobility, which is the MTA state, the tax, the New York City tax, the reemployment, and all the taxes it's required for New York State. Once you're done, you click OK. You're basically done setting up. If you want, some companies would want to set up sick or vacation time. This is the next tab. You can set up hours available as of today. This is like very similar to an opening balance. Hours used. And this is basically if you're starting in the middle of the year. Accrual period, when does it start? When does it start accruing? Beginning of the year, every paycheck, every hour. Hours accrued at the beginning of the year, you could set maximum numbers. Do you want it to be lost, or is it continuing? In other words, you want it to reset, or it continues. This is for sick, and the same applies for vacation. You're done, click OK. Then you can set up direct deposit, but then you need a service subscription from Quickbooks. Then you're basically done doing the taxes. Now here, this is just added in this version. This is just human resources information. When it's hired, original hire date, and everything else, self-explanatory. And this is terminating employee. And then you would want to make sure your workers' compensation works correctly, especially for contractors. Then you select an exact case, the code for workers' compensation, depending on which department they work. You're done. You want to add another employee, click Next. You're done adding employees, click OK. Now you have one new employee. This is the records here, the information, and this is the transaction, which there's nothing so far. Then you can click on the payroll tab on the top, and you will get to this screen. Same thing will happen if you click on the home screen on Pay Employees on the bottom. Depending on your schedule, if you see the schedule color is red, that means you missed. It's not in order. You will basically have to adjust the payment schedule. But let's say we will continue with the payment schedule. I click on Start Schedule Payroll. It's telling you it's the process of doing another payroll run, which is okay. I click Continue. Now, based on the payroll schedule, this was the last payroll schedule and the last check date. Regarding payroll, how would you deal with a 1099 employee that became an employee? Well, this should really be an accounting question. You basically have to issue a 1099 and then start from scratch when you hire the employee. Not talking about a legal aspect. Just in Quickbooks, you would want to set up the employee, assuming it's hired today. 1099 is not an employee of the company. So you would start the same way. You will have a vendor as a 1099. You will not delete the vendor from your vendor list because you still need to issue 1099 at the end of the year. They will also get a W-2 form starting from today. You will just go into the Employee Center and set up a new employee. If you can still pay them under 1099, even though they're an employee, this should be asked by an accountant. You want to pay older employees or just certain employees? You can uncheck all by default. Everything is checked because they're all falling into the payroll schedule. They will only show up on here if these employees are included in the payroll schedule. If they're not, they will not be checked by default. You can click on the employee to see exactly how the check is going to look based on the amount of hours. Now, this employee is working on an average 40 hours a week. It's bi-weekly, so it's 80 hours. Earnings, $14.75 regular. There's no overtime. And this is basically the regular pay and everything else. Assuming the taxes are coming from the payroll service that you signed up from Quickbooks. You need to be up to date in order to have the correct payroll deductions and a tax table. You can enter the time here. if it's less than 80 hours, more than 80 hours. Or if you select that this employee should take the information from the time clock, then it will try to pull the information from the timesheet. Of course, you need to enter the time first. So let's say, for example, this employee is going to add use time data to create paycheck. I click OK. Now when I go to enter time, use weekly timesheet for this employee, you will have a customer, who they did work, service item, what they did, and what is it associated with a payroll item. Usually they get paid for regular hours. Each day, how many hours total did they work? Then on next payroll run, of course, you have to make sure that the week on a timesheet and the payroll schedule are the same schedule, same time. So let's assume all these is correct. You will see these two, this one and this one, are salary people. So there is no amount to be entered per hour, only by salary. You're all done. From which bank account is it coming out? For those who have separate payroll accounts, you would want to make sure that the settings, every time you use the payroll, under edit preference, checking, usually you want to use the checking account, but on payroll, you want to use a different account, if that's the case. This is only if you have a separate payroll account. Then, by default, it will show up the correct account. Click Continue. Now it will show you the gross pay, and this is based on the hour. And this is these two, the second one and the last one, is based on salary. And you can click on each employee and either click on the name or click on Open Paycheck Detail. And it will give you a breakdown of each and every one. This looks correct. Save and next. It moves to the next one. Looks correct. Save and next. If you're all done, save and close. The top part is the earnings. The other payroll items, for example, the deductions or the mileage reimbursements and anything else. The bottom right side is the employee's part of the taxes, and this will come out as a net. On the bottom left side is the employer's part of taxes. Sometimes, you're supposed to give them a check of $1,000. You want the system to calculate the net to gross. Then you click on Enter Net to Gross. Well, it doesn't let you only if it's only one. Let's try a salary person. Here you can enter the amount. Let's say you want it to be rounded to $1,300. Click any place else, and this $1,596 will change. In order for this employee to earn a net amount of $1,300, this should be, based on the taxes, this should be the salary. But most of the time, it will be the other way around. Now, if you want to move it back, either you have to remember how much it was, or cancel out of it. All changes will be disregarded. So yes. Then coming back to this, nothing changed. There's no under one here. You're basically done. You want to print the checks, the paychecks, or you're going to write the checks. And you're going to tell them what check numbers to use. Create paychecks. Now you have the option to print the actual paychecks, or if you write the checks, only print the pay stubs. This is basically how to use payroll. See if it's going to let me preview it. Probably not. Okay, this is the same idea. Select the next check number. All your employees or only certain employees. Click OK, and you're ready to print. When you click on Pay Liabilities, this screen will tell you exactly when you're supposed to pay, what you're supposed to pay, and how much. You see it on due date on the left side. You see the status. If you're late, it will be marked as red, and it will tell you it's past due. And then you will see what type of form. Every time you click on it, you create a liability paycheck, a liability check. Here you can see the actual check, and it will see what it's based on. All these paychecks. When the time comes, you will check off exactly what you need to pay, view/pay. If you want to process the payroll forms, you would need a subscription from Quickbooks. This is a sample company, so I don't think it's going to work. Let's try it. What type of form do you want to process? Federal forms? Let's try. This window will ask you, first of all, what year, and then what type of form. Usually all this is done by an accountant, so they will know exactly how to proceed from here. Click either one. Select what calendar year, if it's a quarterly. If it's an annual, 940 is annual. You just entered the year. 941 is quarterly. What quarter? This quarter, last quarter. You change the date basically on here. You click OK. The form will show up. This is basically how to do payroll. Any questions so far? If you want to have service, separate service, meaning you want to make sure that all your payroll is done correctly and on time, you'd rather want to have a service from Quickbooks. You will basically contact Quickbooks and make sure that you have the correct payroll service according to your company. How to do statement charges. I had a question by email how to do transfers, exchange accounts. I did not quite understand the question. So if that person is here tonight, please repeat the question. It could be two types of questions. In QuickBooks, you can't have the customer and a vendor the same name. Let's say you try to set up a customer center. You have a customer called ABC Customer. You go into your vendor center. You add new vendor. And you say, reason why I'm typing on top, because I'm not interested to type any place else. I just want to get the point. You click OK, this is the message you will get. Can I have more than one? What you will need to do is make a slight change. So let's say this is taken care of. It used to be in the old days, you used to enter an extra space. It used to work. Now QuickBooks got smarter. Can add an extra space to it. Got to enter anything different. Now you're able to have the customer and the vendor the same name, slightly different. The problem starts when the same person sometimes buys from your company and sometimes sells. Then you try to reconcile and see who owes more. Let's say, for example, this is now a vendor. I received a bill from this vendor. Today's date, $1,000. What is it? This person is a subcontractor. Save and close. Now, the company owes to this vendor $1,000. Going to my customer, I'm going to sell something for this customer. ABC customer. This is a window because we have open estimates for this customer, and we also have open sales orders. I click cancel, or I can simply say create a new invoice. Today's date, item. Let's say I do some work for the customer for $1,500. Save and close. Let's say it's a non-taxable item. So the total amount of the invoice is $1,500. Of course, customer doesn't have this much credit. You want to proceed? Yes. Because you know in the back of your mind that this customer owes you $1,000, you owe this vendor, same person, $1,000, so the net amount is only $500, which is okay. Now, this person, this company tells you, I'm only going to give you $500, and then we're clean. If you receive a payment, $500, going into receive payments, amount is $500, paid by check number, to pay off this invoice, $500 out of it. Saving close. Where does the money go? To undeposited funds. Now the problem is, how does this get wiped off, and how does the vendor balance get wiped off? The best way to do it is to create an account very similar to barter account. This is actually what barter is. Accounts, on a chart of accounts, new accounts, what is it? Bank account. Continue. An account number? Yeah, why not? What's the next account number available? 10500. Chart of accounts. The name is going to be barter account. You can also call it exchange, whichever way you want. Save and close. No online service because it's not really an actual account. Basically, from here on, you do the exact same way you would receive and pay your bills regular. The only difference is you're going to affect a different account. New transaction, receive payment, $1,000. How is it paid? Barter. Payment method is barter. Save and close. Next step is going to be record deposits. This $1,000 cannot be associated with any other type of payment. Why? Because it's going into a separate account. Click OK. Select this barter payment. Click OK. Make sure to select the barter account. This $1,000 is going to be deposited into the barter account. Done. Now go into pay bills. If you select this account, the barter account, you will see you have available funds, $1,000. Select this customer, the same customer obviously. Place a check mark on the left side next to the bill. Now it will say after this payment, you will have a net amount of $0. To be printed? No. To assign a check number. Pay selected bills, and you could say either barter or change, whatever. Okay, and that's done. Customer has $0 balance, and the vendor has $0 balance. This is the way the easiest way to handle barter. Same way, some of my clients might sometimes ask, how do I handle it? I don't take credit cards. My customer wants to pay me credit cards. So I give the credit card to my vendor. And they charge it. Well, you should do it the same way. Receive payment from your credit card, the amount from your customer, the amount the vendor is going to charge on a credit card. Deposit to this exchange or barter account. Pay bills from the barter account, exactly the same amount. Cannot be $1 less, $1 more. Then you will have an offset from your customer and your vendor. Bottom line comes down to, and this is very important, always to make sure that this barter account balance is 0. Usually when you try to transfer funds between accounts, especially if both accounts in the same bank, you could easily do it online. How do you record it in Quickbooks? Click on Banking, Transfer Funds. From your checking account, let's say, to your savings account, how much money? And that's basically. Sometimes it's not the same bank. You want to save it? No. Sometimes it's not the same bank. You need to write out a check. Then you can't say, if it's being deposited on a separate deposit slip, then you don't have a problem. Pay to the order of the company, which is your own company, and usually it's part of the other name, or cash, the amount, and here it will specify that it's a transfer to the other account. The problem starts when you try to print a check, and deposit the same check with other checks on one depositor. Then you would need to have a middleman, a middle account. This money went into, and you can use the same barter account for this purpose also. As long as it goes in and it comes back out right away. So let's say you're writing out a check from your checking account to your barter account, the amount of $100, save and close. Now you should have in your barter account $100. Now you're going into record deposit. And let's say you're going to deposit this amount, which is the customer payment, along with $100. So you will write here where it's coming from, but more important, this is optional, more important is the barter account and the $100. And then you click Save and Close. Again, your barter account is zero. If you ever use a barter account, always make sure the balance is zero. If not, double check where the problem is. Always supposed to be in and out. So write letters. I had a question the other day, how do you do labels? Click on File, Print Forms. One of the options is labels. What do you want to write the label for? Only the customers, all your vendors, all your employees, all the other names, just one, and select, or multiple names. And then you select which person, which contact you want to write labels. Start only for a certain zip code. Sort label by name or by zip code. You want to print shift to address when available. You want print label for inactive names also. Print label for jobs, not only per customer. You can also print for certain customer types or by vendor type. You click OK. Now you have to select what label format. Basically, all these are supported by Quickbooks. So before you buy from a stationery store, you have to make sure that the numbers are compatible with Quickbooks. And then you click Print. This is how to print labels. You want to write letters. In this version, anytime you open a form, you will have the option to write the appropriate letter. Prepare an invoice letter. But sometimes you want to write a regular letter, or you want to customize your own. Under Company, prepare letters with envelopes. Last option. This is all pre-designed letters, or you can customize your letter on your own. Let's see how a standard letter for customers look like. All customers, only active customers, or only inactive customers. Do you want to create a letter for each customer, including all the jobs, or each job separate? Now you will see the customer and together with and the job, or only for customers, depending what the purpose is. Click next. What type of letter? They have pre-printed, pre-installed layouts, or you create on your own. Of course, you need Microsoft Word installed on your machine in order to use this. Let's say, for example, a blank customer letter. Click name. You want to sign your name and your title. Click next. Now it's preparing a letter on Word. Now, I don't think you will be able to see it since it's not enabled to share the Word document. It's basically how you can write letters. The system will flag you in Word if there is missing any information. Before you write letters, if you want to have the first and last name or the company name on the letters, you'll have to make sure you add it on the customer or the vendor center or employees or other names. Now, once it's prepared, it's asking, do you want to also print an envelope? I would say kind for now. Any questions so far? How do you set up users? On the company menu, users, and of course you need to be the administrator to set up users. Any user in the system can see who else is set up in the system and if they're logged in or not. And you will see under company, users, and view users. It will have the username, in parentheses, if they're logged in or not. In a multi-user environment, you have the option. Here it's not set up. If you have more than one license, you have the option to communicate. Very similar to instant message chat. And it will be on this option. To set up a new user, you click on company, users, set up users, and role. Click on new, give the user a name, and under what role will they be? They can have accounts. They can see accounts payable, accounts receivable, banking, and everything else. So every time you want them to be part of this group, either double click or click and click add. And then you decide accordingly. Want to create a password, confirm password, and that's basically. You click OK. You want to create a password, and say no. Now you have a user. The previous screen was only for Intuit Sync, which is not something we're discussing tonight. Now you have this user and you see exactly what permissions they are. You want to delete the user? You click delete. If you want to copy over from one user to another, click duplicate and just give it a name. This is usually if you hire another person in the same department, basically want to copy someone that's already in. If you want to add or change any user that loses the password, the administrator can come in, double click, or click edit, and change the password. And of course, you can lock out the user. Roles, you could change it here, and then you could see who is assigned to this group based on users. Question, can you edit any info on a customer when everyone is signed on, or does it have to be in single user mode? The answer is you can edit anything. You cannot delete or move it on the customer center. But edit, you're able to, even though you're not the administrator, and even though you're not in single user mode. This is basically how to add a single user. To add a user. I don't know how many people are in charge of making backups, but this is far more important than actually entering data. It takes a few seconds. I would urge everyone, unless you have an IT person in charge for it, to make sure to do a backup at least once a week. I've seen too many cases, unfortunately, people losing information and going back for months or years. You click on a file, create backup. Trust me, it takes a few seconds, less than a minute. Of course, it depends on the size of the file. You can do an online backup, and you can have a subscription from Quickbooks, of course, cost money, or a local backup to a USB flash drive or anything else. Let's select local backup, and then you click next. Here you click browse. Basically, where do you want this to be saved? If you have a flash drive, every flash drive, as soon as you insert this into the computer, it will create a letter drive. You click on browse, and you will see it as a letter. You select it. It comes up on here. So let's say I select my C drive. I want it to be covered on there. You want to add the date and time as a backup. It has an advantage. You know exactly when it was backed up. Every time, but the disadvantage is, every time you will create a backup, it will not overwrite the previous backup. It will create a new one. And of course, you would need to have enough place, enough room on this flash drive or whatever for all the new backups. And then you click OK. Since we selected the C drive, system is asking you, are you sure you want to select this location? Usually they want the backup to be both sites, either a flash drive or a network drive. but I would say it's okay, use this location. Now, this is the last step. I don't want to do a backup right now. Save it now, you click finish, and it's ready to go. It will take a few seconds. It will confirm if the backup was done successfully or not. Again, I would urge everyone to do it as often as possible. And then, of course, you take out you remove the flash drive, and you put it someplace off-site. To change anything on the list, let's say, for example, you want to change terms. List, customer vendor profile list. Anything that you have in Quickbooks with a drop-down menu, it's stored on a list. This is where most lists are located. Terms list, job type list, vendor type, customer type, and anything else. Select which one you want. You can edit it by double-clicking. You can delete it, of course, if you never use it anywhere. You can add by customer type and you click on New. This is the way how you change all the other lists. Now let's talk a little bit about memorizing a transaction. Probably, I would say most of companies have recurring transactions. Let's say, for example, you have rent. You're paying every month, you're getting a bill from your landlord for $1,000. The first time you will set up the bill, who's the vendor? Let's say my ABC customer is the vendor. So you set up a bill. On a monthly basis, it's going to be the first. Let's say December 1. Reference number, nothing. Paying $1,000 each month for rent expense. You select the expense. Now, before you save it, either click on Edit, Memorize Bill, or Control N. Now you have basically three options. Add as a reminder, do not remind me, or automatically enter it. Here it's going to say the name, basically the name of the vendor. But you can rename this, and it should say it's ABC Rent Bill. This way, on the memorized transaction list, you should know exactly where it's for. If it's the same every month, I would advise you to set it as automatically. How often? Monthly. That's usually the case on rent. Next date should be next month, the first of the month. Now, do you want this to go forever? Or it's probably going to be changed in the next couple of months because the lease will increase. Number remaining is how many times you want this to be automatically entered. If you don't want this to have an expiration date, leave it blank. If you do, if you only want to enter this the next 12 months, type in the number 12, 4 months. And the number is basically, let's say you want this daily, and you want it for the next year, it's going to be 365, and so on. You can do it daily, weekly, every 2 weeks, twice a month, every 4 weeks, monthly. You can do it every second month, only quarterly, twice a year, and annually. Let's say you want to run it forever. How many days in advance do you want the system to pop up to remind you? It's still going to remind you. On this date, January 1, 2016, when you open Quickbooks in the morning. Now, please note, if you're in a multi-user environment, the first person who opens the Quickbooks, this company, will get this note. Do you want to enter this memorized transaction? This is only if it's set to automate transaction entry. But do you want this transaction to be entered on this date, or you want it to be entered a few days before? Here you can set exactly how you want it, how many days you want it to enter. This is very helpful if someone is in real estate business. They're charging usually in the beginning of the month for the monthly rent from their tenants, but they want to send out the rent statements a few days before, let's say on the 25th. So the next date is going to be the first of the next month. But how many days before? It's going to be 5 days or 6 days. You click OK. Now, you have the option to save this bill or disregard it. But the memorized transaction of this bill is already saved. So let's say I don't want to save this with last month, only for future. I click clear, and it's not entered yet. I can see the memorized transaction under list, memorized transaction list, or Control T. Here is the bill we just saved and memorized. You have a few memorized transactions here. You will see the name, the type. This is a bill. What account? The bill is obviously an account payable. What's the amount of the bill, the total bill? How often? And is it set to automate? If it doesn't have a check mark, that means it's set to remind. And then, what's the next date to be entered? If you want manually enter ahead of time, and not wait until the system reminds you, you can simply double-click on it, and you can see the date is set to correct date. And even though it's set to enter it ahead of time, the date will still be the date you selected. You have the option to save it or to clear out. If you want to change it, let's say you don't want anymore to automatically enter this. You can either delete it. It's not going to delete any bills from the vendor, only this memorized transaction. Or, if you do want to keep a record of it, you just want to change it from automatic to remind me or to not remind me, simply click on it, but then it will never remind you. Or add the reminder list, and you will say, when do you want to remind me? This reminder will only be on the reminder list. Where do you get the reminder list? Under Company, Reminders. This is a list of all the reminders. We'll talk about this in the upcoming session. Thank you very much. If you have any questions, please email me, mayor@fmdbusiness.com. Also note, there was a problem with the recording last night. They're working on it, and hopefully tonight it was successful. Looks like we didn't get any error messages, so hopefully they will be able to send it out as soon as possible. Thanks, everyone. Have a great night.